let me start by taking a look at GU. Why GU? Basically, GU right now is hammered. You had that failed attempt to unseat Gordon Brown in the UK. A lot of the bigger banks are talking about more weakness for the UK, or rather for the British pound. And if you look at the charts, ever since that failed attempt to push above 38.2 fib last Monday, we've been seeing weakness in GU. If you look at the indicators from a big picture, we find that our daily MACDs are starting to see a negative slope. Technically, if you follow definitions for MACDs, your MACD is still above the signal line. By definition from textbook, that is actually seen as bullish. But when I look at the MACDs, I tend to focus on what is the angle of the MACD line. What is the slope of the MACD line? And right now, the slope is slowly turning negative. Add to that, you already have a bearish stochastic, and I tend to think a combination of 38.2 fib, a bearish stochastic, and an MACD slope in the dailies that's turning negative is further, or to me, other suggestions that we are looking for, at the very least, a retest of the December lows at 58.29. Potentially, we could be talking about actually seeing more weakness in GU. If you look at things from a very big picture, you look at things from a weekly level, we're actually staring at a double top in GBP USD. The trigger for that double top, of course, is still a lot lower than where we are, 57.03 level. So for now, what I'd like to see is a test of those December lows, a test of 58.29. According to the daily indicators, we should be headed there. Question is, after or given the extent of today's sell-off, we've already seen what? Let me just check. We've already seen about 160 pips of sell-off in GU today. Would we be able to expect GU to generate another 80 pips of price action? Okay, or generate another 70 pips of price action? Test that 58.29 area? Well, let me point out, there were days before when the range for GU would go for 200, 300, or even 4. So, all we really need is what? Is an excuse for people to be bearish about the UK. All we really need is an excuse for people to expect cable weakness, and I don't doubt that there is potential for further weakness as far as today is concerned. If you have a more long-term outlook, then I really think that over what's left of the trading week, our objective would be to get to that 58.29 level. All right. Can we then, if we're saying that 58.29 is our target, can we then argue that it is still possible to do something? Is it still possible to initiate trades looking for that sell-off? If we look at our charts, several supports have already been breached. Initial breakout point for me was that 59.50 area. We've also pushed through the next support level at 59.20. As far as 5900 is concerned, I'm not really concerned too much about it. I know some people would think of 5900 as cycle level, but if you look at previous price action, we don't really have a lot of we don't really have a lot of activity around that area. So what do we have then? Are we bearish in the H4 level? You look at your indicators, and what do they tell us? After getting out of this congestion, we found ourselves with a new bear cross in stochastics. This one going in the direction of a pre-existing bearish MACD. For me, normally this kind of setup is what? Is suggestive of a continuation of price action. If you already have MACDs headed one way, you have trends. Okay, let me just draw some trend lines. you've got trends in your you've got markets trending in your direction, then to me a crossover from the stochastics is actually an argument for an entry. I'm not saying that it's a good time to join the market now. Okay, that entry was generated several hours back, but to me this is just further evidence that if you're bearish or if you have a short, keep holding on to it. We could continue to expect a test of 5830.